Okay, welcome back. And this is a special conversation that we have for you. The Indian economy doing fairly well for itself. Growth has surprised on the upside. Inflation continues to be very, very contained. And 2025 has turned out to be a rather unique year in India's recent history. Even as concerns over tariff shocks, AI exuberance, and its resultant impact on jobs continues to create headlines, India has emerged as an outlier of sorts. But external headwinds continue to persist. Of course, we spoke about those. Uncertainty over US trade deal, rupee weakness, slowdown in nominal growth are weighing on the overall economic outlook. So the question remains, will the strong momentum continue? And to answer that very question, we've put together an economy roundtable with some of the best macroeconomists to read the tea leaves as we step into the new year. Listen in to a slice of that.
The biggest surprise has been the GDP growth, because when we started the financial year, there was a lot of apprehension about how growth would be affected on account of tariffs. And I think all of us had our own calculations about how GDP growth could potentially be set back on account of tariffs, because exports would get affected to the US. But today we can say with a bit of satisfaction that a lot of those fears were probably overstated. And the fact that we have done 8.2% in the second quarter is remarkable. And more importantly, I think for the financial year, I think there's general agreement that GDP growth for the year would be upwards of 7%. We at Bank of Baroda are looking at 7.4 to 7.6%. We are quite happy that RBI has also updated its forecast to 7.3%. So I think this would be the major surprise for us in India.
Okay, so that's going to be the main metric to watch out for back home. Kanika, let's come to you. How would you sum up India's macroeconomic story? We've grappled with a lot of googly balls coming in from the US, if you could call it that. Sum up this year for us. What has stood out to you? And more importantly, what is going to be important to watch out for as we head into 2026?
So, I would agree with what Madan said, that this was a year when we started the year, especially the financial year, when US-India trade-related shocks, tariff hikes, not just India, the world was grappling with the same. We all thought of a lower clip in terms of our forecast. Then, of course, we had to grapple with the delayed trade deal. Then there was an AI exuberance around the world, but India did not get as much of an opportunity. But with the front loading of exports, and I would say more important if I have to sum up this year, despite persistent global shocks, the consistency from both RBI and the government in terms of policy stimulus to address or combat the impact of those shocks has been phenomenal. That's played a bit of a role this year, though it's been a Goldilocks moment where we see higher growth, low inflation this year, which is tracking around 7.5%. In the current financial year, inflation is around 2%. Next year, we think that the delayed impact of the policy proposals may continue to show an impact. So even next year, we see growth is around 6.5–7%, bias of close to 7%, and inflation staying below 4% target for the MPC.
Okay.
So overall macro framework remains favorable. Yes, what we need to watch out for is 2–3 factors. First, how does the global economy pan out? Do we actually see a meaningful slowdown in the world, which is not yet being priced in, not being discussed as of now, because we think if not monetary policy, fiscal policy will call the shots. Will we see sustainable impact of GST-led consumption boost on growth? We think yes, but of course the numbers need close watch. Last but not the least, most important, which is something the markets are watching out for, is timing of the US-India trade deal.
Yeah, so clearly lots to watch out for, and the Goldilocks term that you used has been used by the governor in his recent speech as well. So let's see where the economy heads going ahead. But Anita, according to you, now that the front loading is done by the RBI, there is clear action on what they're going to do with the rupee, although that may play out after a certain while. What do you think the top priorities of the RBI are going to be in 2026, and which issues are they, or let's not call it issues, let's call it which topics are they going to be looking at? Is the focus going to be more on growth? Is it going to be on inflation? Is it going to be to control the fall that we're seeing in the rupee? Where do you think the core focus is going to be?
I think the core focus is going to be on the rupee. See, on growth front, I would slightly disagree, because when we see nominal GDP growth, right, that's actually less than subpar, just 8.7%. So in any terms, if you see, that's probably one of the things that will break or lead to a break in credit growth. We are already seeing 11.5%, but 8.7% is not something really to cheer about, right? In any case, and you can talk about the method in the madness, CPI revision, in whatever way. The problem it will create is on the fiscal front, because and we are already seeing that tax collections are not that very great. Your corporate tax, income tax, all of this is just about not meeting budget estimates for this year, at least till what we see in the November data. So that's something to worry about, and I think whatever RBI might make of its estimates of real growth, the reason why they cut 25 basis points despite of the currency pressure is that growth is weakening. And nominal growth is not something to cheer about. Even Finance Minister herself has actually said that. So that's something that we should be worried about. But currency is the bigger pressure reason, because currency can lead to inflation, macro stability, bring back a lot of pressures. And what I would say is that this currency pressure is something that we have been seeing for the last 1 year. No one expected it to go this far, because if you go back in time and see what happened last year between October to December, balance of payments, we had a 70 billion of BOP deficit, which was half of it valuation, half of it real deficit, and so on. Since then, what we saw is that your forward book went into a negative of 88 billion in February. Some of it we recovered in terms of reserves, but what we've been seeing is a steady decline in foreign currency assets. So led by gold, people generally tend to see that, your foreign currency reserves are great, 11-month cover and so on. But if you actually strip that to 2 levels below, take it to foreign currency assets, and then strip the negative forward book, it kind of comes to like 8 months and what we speak. So that's clearly something that RBI will be watching for. Of course, so 8.7% growth did need a stimulus, so they gave it, and they're giving boost of liquidity alongside, which is another critical stimulus for growth. They might do more, because from what we are seeing, they're doing 10-day RRR and all of that, VRR and all of that, which means that they're slowly preparing for a sustained stimulus in the economy in terms of liquidity. But I think currency will be something that we really need to watch for. Just taking a minute, I think currency is no longer about the US-India trade deal, it's more about capital flows. We have seen a steady decline in FDI flows, FPI flows as well. So it's not just about the trade deal. There is more to it that probably policymakers, RBI, will be watching for in 2026.
Okay.